Most of the world's money isn't paper or metal, it's digital, a number on a screen, a ghost in the machine. Over 90% of all value we call money is just data, moving invisibly through global networks. This digital river shapes cities, changes lives and powers economies. Yet we never see or touch it. For centuries, money was tangible. Gold coins, shells, salt. You could hold it, feel its weight, and trust its value. The journey from solid coins to invisible data is a story of trust and technology. It began with a promise paper notes representing gold, backed by trust in the issuer. This leap of faith set the stage for money to become even more abstract. Today, money moves at the speed of light, through apps, cards, and algorithms. Our financial system is now a force of nature, connecting people and creating opportunity. But it also brings new risks and questions. Who controls this invisible river? Where is it taking us? The transformation of money is one of humanity's greatest innovations. It's a story of letting go of the physical and embracing the invisible. As we begin our journey, we'll explore how money became a digital force shaping our world. The old certainties are gone, trust is now in code and institutions. The invisible river flows on, carrying our hopes, fears, and fortunes. We are all part of it, whether we realize it or not. Our story begins here, in the hidden world of modern money. For millennia, money meant objects, gold, silver, coins stamped with emperors' faces. Its value was universal and tangible. You could test its purity and trust its worth. But coins were heavy, slow to move, and risky to store. The invention of paper money changed everything. First used in China, paper notes represented a promise, exchangeable for gold or silver, backed by authority. Money became a symbol, not an object. Its value rooted in trust, not substance. The gold standard anchored paper money to real reserves, creating stability but also limiting flexibility. Governments could only print as much money as they had gold, which constrained economies in times of crisis. Eventually, the gold standard ended. Money became fiat, valuable, because governments said so. This was the ultimate act of collective belief, untethering money from physical anchors. Now, value was based on trust in institutions, not in gold. This shift allowed economies to grow, but also made money more abstract. The leap from gold to paper set the stage for the digital revolution. Money was no longer about what you held, but what you believed. The world's wealth became a matter of trust, not touch. This transformation opened the door for money to become pure information. The age of paper and promise was just the beginning. The next leap would make money truly invisible. The next revolution in money wasn't about paper or metal, it was about electricity. The telegraph let banks send money as information, not objects, across continents in seconds. Wire transfers moved value with coded messages, no coins required. Early systems were manual and exclusive, run by trusted clerks and operators. The invention of computers changed everything. Banks adopted computers to process transactions and keep digital ledgers. Your account became a line of data, not a page in a book. For most people, this digital world was invisible. Banking still meant tellers and passbooks. But behind the scenes, computers built the rails for modern finance. These networks would soon connect everyone, everywhere. The foundation was set for money to move at the speed of light. The digital age of money had begun, quietly reshaping the world. The digital world of money first touched everyday life through a plastic rectangle, the credit card. Introduced in the 1950s, credit cards let people borrow instantly, replacing cash with a swipe. Each transaction triggered a hidden dance of data, approval, denial, all in seconds. Debit cards soon followed, linking directly to your bank account and making spending seamless. ATMs turned digital balances into cash, anytime, anywhere. Plastic cards rewired our relationship with money, making spending frictionless and almost invisible. The pain of handing over cash faded, spending became easier, and so did debt. For banks, cards were a goldmine, fees from merchants, interest from customers. The plastic rectangle was more than convenience. It was a new engine for finance. It made money abstract, a number you could move with a swipe. The psychological shift was profound. Money felt less real, more like a game. This was just the beginning of our journey toward a cashless world. The plastic card paved the way for the next leap: money in our pockets, on our phones. The future of spending was about to get even more invisible. The internet and smartphones put a bank branch in every pocket. Banking apps made managing money simple, fast, and always available. Digital wallets like Apple Pay and Google Pay turned cards into secure tokens on your phone. Paying became a tap or a glance. Money is a function of your device, not a thing you carry. Apps like Venmo and PayPal created their own financial ecosystems, making money feel instant and free. Behind the scenes, transactions settled later, but to users, money moved at the speed of life. Our habits changed. Balances on screens replaced cash in wallets, splitting bills, paying friends, shopping. Everything became digital, silent, and tracked. Every transaction left a data trail, turning our spending into a valuable commodity. Privacy faded as convenience grew. The smartphone made money part of our digital identity. The way we think about money, and who controls it, was transformed forever. The same tech that put banks in our pockets supercharged global finance. Trillions now move across borders daily, not as cash, but as digital signals. Networks like SWIFT connect over 11,000 banks, enabling instant international payments. A transfer from London to Japan is just a secure message, settled later between banks. This web of trust powers global trade, shrinking the world and lifting millions from poverty. But speed brings fragility. A crisis in one country can ripple worldwide in hours. The system is efficient but complex, beyond any one person's control. It's like a global weather system. We can watch, predict, but never fully command it. The global network has made us all players in a high-stakes game of speed and trust. We're more connected and more vulnerable than ever before. The invisible river is now a global torrent, shaping destinies everywhere. For decades, banks ruled the world of money, controlling access and flow. But technology companies are now the new power brokers. Apple, Google, Amazon, and Meta have billions of users and seamless digital experiences. They're layering financial services onto their platforms, capturing data and loyalty. The bank becomes a silent utility. The tech company owns the customer relationship. With vast data, tech giants predict credit risk and personalize products, eating into banks' profits. Fintech startups thrive in niches while slow banks risk being left behind. Customers gain convenience, but lose privacy and control. The new kings of money rule with data, not marble halls. The financial landscape is being redrawn. Fast. Who wins? The agile and the digital. Who loses? Those who can't adapt. Digital money has transformed lives, especially in developing nations. Mobile services like M-Pesa gave millions their first access to banking, empowering small businesses and families. But the digital revolution also creates new divides. Those without internet or smartphones risk exclusion. As cash disappears and branches close, the elderly and rural poor are left behind. The promise of inclusion is real, but so is the danger of digital exclusion. The gig economy thrives on instant payments, offering flexibility, but also insecurity. Stable jobs give way to piecework, making financial security more elusive. The foundations of our economy are being rebuilt on technology. Opportunities and vulnerabilities grow side by side. From Nairobi markets to European towns, money's transformation is reshaping daily life. We are being remade by the very tool we created. The digital age of money is changing what it means to participate in society. We've traveled from gold coins to digital flickers. Money is pure information. New ideas like central bank digital currencies and cryptocurrencies challenge old systems. Money is becoming programmable, managed by AI, and ever more abstract. The future promises convenience, but also raises a crucial question. Who controls this invisible power? Will it be individuals, governments, or tech giants and their algorithms? The story of money is a story of power. As money becomes all around us, not in our hands, we must decide what it will mean. The next chapter is ours to write.